Ready?
Well, let me tell you, I think you're in for a treat with the stuff we're gonna be going over tonight. You know, we have some great calls, man, but I'm looking forward to this one because as we start to get deeper into you know some training on what it is that we're really learning. I think this is gonna be a great call for everybody. So I'm looking forward to it. So yeah, welcome. Keep coming in because this should be a good one. So before we get into it, let's stay on point and turn the call over to Barbara to do what we must do. So Barbara, if you can take us through our most important business, turn it over to you.
Yes, this is our Futures and Commodities one-on-one trading group disclaimer. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
Awesome. Thank you. Thank you. So Barbara, let me ask you, I'm not sure. I know we don't have Dr. Melvin tonight, but is Thora with us? If, are you going to take us through the
Miss Dora's not on, so I'll do it.
okay. So normally we go to Dr. Melvin to do our quizzes that we have, but she's not with us tonight. So
Yes.
Barbara's going to do the quizzes. So we're going to
Okay.
stay with you then, Barbara, when you're ready. Go
Yes.
ahead.
So here's the first quiz. When placing a trade, you place your order to buy a futures contract at a specific price. What type of order is it? A, limit order. B, order in the court. C, stop loss. D, market order. E, not sure.
Market.
Limited.
I miss.
I
Somebody,
heard somebody say stop.
Limit.
somebody
So
said
limit
stop.
order.
Somebody said market.
Do you mind reading it? Is it part
Oh, of course not. I'll repeat it again. When placing a trade, you place your order to buy a futures contract at a specific price. What type of order is it? A, limit order. B, order in the court. C, stop loss. D, market order. Or E, not sure.
limit order?
Okay, Jamal said limit order. Somebody put something in the chat. She said stop loss. I think somebody said before stop loss, and somebody said market order. So the correct order, if you're placing it at a specific price, that means it's a limit order because you want the market to come to you. So the answer would be A. But good, everybody that participated. Good job.
Yes.
Next quiz question is, you do not need a brokerage account in order to trade futures.
False.
A, true. B, false. C, maybe. D, not sure.
False. False.
Somebody said false. False. I think the falses have it. Everybody saying false look like.
What you think, Barbara? Are they right?
Yeah, you can't trade without a futures contract. Without a brokerage account, you can't trade a futures contract unless you have a brokerage account. That's correct.
Excuse me, Miss
Yes.
Barbara. Hold up for 1 second. Hey, D, stop trying to impute that doubt, bruh. Cause you sitting there trying to ask the little questions and have folks questioning their answers, man. Stop it, man. Yeah, go ahead. Go ahead. I'm
He,
step back.
he loves to do that. That's fun to him. He loves to do it. He be trying to get y'all caught up all the time. Here go another one. Trading with a stop loss can help you. You can help you in multiple ways when you are in a trade. It can help you limit your loss in a trade. You can lock in and protect your profits in a trade as well. A, false. B, true. C, not sure.
True.
Everybody saying true. B's got it. That is exactly right. That's the purpose of a stop loss. It says
Yeah,
what it does, it stops your loss.
yeah, man, I love it, Barbara, because it actually it shows that the trainings are really doing good because everybody really seems to be comprehending, going through these trainings. Yeah, and we talked about the brokerage account last week a lot, and because we are operating, as we already have determined, operating in a regulated space, you have to have an account through a licensed and regulated broker, you know. So you were ever able trying to open up a futures account and they don't have the proper license, and that's a huge red flag. Like you can't buy and sell futures without having the proper license. That's why we have to go through the broker to do something. Great job, man. I love it, Barbara. Awesome.
Yes.
Yeah. And what was that second quiz again that you mentioned about the I think that second one was about what was the second quiz? Remind me again.
The second one was you do not need a brokerage account in order to trade.
Okay, it must have been the first one then. What was
The
the
first one was when placing a trade, you place your order to buy a futures contract at a specific price. What type of order is it?
Yeah, so I wanted to come back to that because I wanted to see who can anybody tell me what what a market order would be if we were to place a market order. We just determined that that's a limit order on the, but what would a market order be?
A market order would be the price that when you enter into the market, that's the price that they already have established.
So when you say that, you saying it's basically
Whatever the market is stating.
whatever the current price is, right?
Yes, sir. Yes, sir.
Right,
Yes,
right.
sir.
That's it. That's it. So we prefer to use the limit order because we like for the market to come to us, but that market order is the one where you don't know where you're gonna get filled at. Because if the market's actually open and currently trading at the time, when you get filled, you don't know what that price is gonna be. Depending on the bid and the ask. Everybody remember when we went over the bid and ask?
Info.
Yeah, so that's why you have more control when you're placing a limit order. Okay. Great job though. All right, Barbara, let's jump into what you got for us this week. What we got?
All
I know
right. We got two types of the marketplace, and we have the chart types. And we're gonna go back over the two type of traders in the marketplace because we're getting ready to really get into the charts. So we want to really reiterate the two type of traders that's in the market and how different they are. So that's
yeah,
what we're gonna go over tonight.
yeah. The two types we should remember that we have two types of traders, and that's the fundamental trader, and that fundamental trader is one that uses all type of sources when it comes to making their decisions. So what I mean is they may, you know, listen to videos or watch videos or read commentaries or blogs, or they may follow and keep up with the reports that come out, or you know, anything they may see on TV, watching the news, or rumors that they hear. All kind of things of that sort is what a fundamental trader would do. Now, what's so important to understand is that the fundamental trader is someone who makes their decisions based off fundamental information. But here's what I want y'all to know about that. I never want to try to influence anybody which type of trader to be. But you'll figure out and learn which one you are at some point. But the fundamental trader has to watch the information or go off the information to get their decisions. But the thing about it is when you're trading with futures, it's a little more difficult from the fundamental standpoint because of the fact of the information that you may be learning or reading or listening to could be old news at the time that you're hearing it. And that's what makes it, kind of difficult as a fundamental trader. But you still can be a fundamental trader. Many of our people are fundamental traders. So, yeah, Barbara, what's your take on being a fundamental trader?
It's like you said, basically by the time you find out about it, the market has already reacted to that fundamental news, and it's probably have been reacting to it for a while. So you're kind of behind. But some people do well as being a fundamental trader, but I watch the news, and I look at the weather, especially with the grain market, and it helps me to be able to trade. But my basis and foundation is being a technical trader. I can say that.
Yeah, and I think from what I've gathered, we have a lot of fundamental traders in our group, in our community. But that's one type of trader. Did you have something we wanted to look at before we went on to the other trader?
Yes, so I'm gonna play a clip from the movie called Limit Up, and it's going to depict in this movie there's two type of traders, what we're talking about now, fundamental and technical. And I'm going to show a clip from based off of Chuck being a fundamental trader. And so you're gonna see the difference between the fundamental and the technical in what really could happen in a real scenario.
Awesome.
Well, whatever. Said, okay, let go. Sorry.
Yeah, that's okay.
Oh,
I guess we're even now, right?
I can't believe I didn't.
That's okay. It's okay. Really.
Are you sure you're okay?
Fine. I got another nose at home.
Marty, could you use a tip?
Reduce the size of my nose. I know. I'm working on that.
No, I had this feeling that a boatload of grain that's being sold to Africa is really going to Russia.
What? Sorry, I can't hear you. What?
U.S. grain is being sold to Russia.
Rush Street. We were having dinner on Rush Street. Casey, where did you hear that?
I didn't. It was just a feeling that I had, my intuition.
Well, thanks. I kind of follow my charts, not intuition.
Well, whatever. I'm sorry about the elbow.
No, it's cheaper than a nose job. I gotta get back to my spot.
Looking pretty cute today, Mr. Feeney.
Feelings mutual.
Thanks. Hi, Chuck.
Hey, kids, what's this I hear about Russia? Come on now, don't clam up on me.
I don't know.
Just whisper to me. Casey, now how sure of this are you?
Not as sure as I was the last time.
Feeling something like this is going to happen today. Well, I'll either be in Vegas tomorrow or I'll have to sell my house. Lucky pig, lucky pig. This is root hog or die.
Half bid for 100.
Full.
Hey, Chuck. Shouldn't be trading hundreds. What are you doing?
My lucky pig says I should.
Half bid for 100.
What are you trying to do, bury Chuck Feeney?
Good enough.
No, I just want to give him a bath. He needs a bath.
I got 250 and 3.
Chuck Feeney, bye-bye, Chuck.
Report just came out. U.S. grain is going to Russia.
Merrill Lynch buying 10 million. Let me take go. I'm stepping at you. Hey, come on. I'm 43 cents.
Hey, Chuck. Bring the pig tomorrow.
Hey.
Way to go.
Easy. Mister, you. Won't open it now. Later, when you get home. Thanks for the tip.
All right.
Wow, Barbara. What just happened?
So Chuck was a fundamental trader. Mario said he liked to stick to his charts. That means he's a technical trader. But in this case, it worked out for Chuck. Being fundamental, it worked in his favor. It went limit up.
Yeah, and Marty turned down the tip because he don't like to trade from that information like that. So he trusts his charts. So he said, I like to stick to my charts. And his partner, Chuck, he is a fundamental trader. He wanted to know what is this talk about Russia? And being that we talked about fundamental traders, they make their decisions from fundamental information. He went with the rumor and the information he got from Casey. And in this case, it worked out in his favor, right? And Marty, being the technical trader, he didn't want anything to do with that. So we got a chance to see, here's a fundamental trader, here's a technical trader. And they both have different ways of making their decisions, but in this case, the market went limit up. And what does that mean, Johnny B? When the market trades limit up, what does a limit move mean, Johnny?
Well, the exchange, or excuse me, they set a limit on the amount of change either up or down in a day to prevent the market from having huge swings and huge losses. But so if a limit is 50 cents and it goes up to 50, then all trading is halted until for a period of time, or in time for the market to change direction again. So it's a limit that's set by the exchanges to prevent wide swings.
Yeah.
Or huge swing, should I say. A limit move is a pretty wide swing.
Yeah, we heard what Casey's friend was explaining to her, that the limit move was to protect the trader. So it's in place to protect you from the market that's trading up and up and up and not having a limit at all, or down.
But some don't have limits, right?
Right. Some of the commodities that we can trade in the futures market don't have a limit, but most of them do. Yeah. Good stuff though, Barbara. So we have the other type of trader, that we saw and talked about when it came to Marty, the other trader, the technical trader, the one that said, "No, I don't want the tip. I like to stick to my charts." And as you see on the screen, welcome to chart land. So we're about to get into charts. And we haven't talked about charts or got into charts yet, but now we're getting to a point where it's going to be about charts. And a technical trader is someone who makes their decisions from what they see and follow on the charts. And that's the difference between the fundamental and the technical. The charts is where they make all their decisions from. And well, let me ask you, Barbara, can you be both?
Yes, you can.
Oh, you could be fundamental and technical.
Yes, sir.
Yeah. So, and there could be some of y'all on the call right now that's saying, "Hey, I don't know which one I am." At some point, you'll figure that out. That'll come to you. But that's the difference between the two. And the most important thing to remember is that this is where you're getting the information from, so you can decide whether you have a trade that you want to take advantage of, whether it's coming from that fundamental information or it's coming from the technical information from the charts. But the fundamental and the technical, they both arrive at the same place. They just get the information different, if that makes sense to everybody. So that's the difference between a technical and a fundamental trader. Anything y'all want to add, Barbara, Johnny B?
Well, I want to ask you and Mr. Johnny a question, since you're both technical traders. Explain to us your day-to-day routine. Do y'all sit in front of the charts all day? What do y'all do during the course of your day as a technical trader?
Okay. Well, can I go first, Johnny?
Yes, sir.
Yeah. So for me, when I'm ready to get into looking at the charts, for most part, let me just say, on the average, between 10 to 20 minutes, and I'm done for the day. Okay. But what I want to do is I want to go and look at whatever I got on my watch list. So I go to bar chart and I go to my watch list and I see how the market's trading based on the ones that I'm already watching. Okay. So I look at those first. If I got the US dollar on my watch list, I want to see what that chart looks like and how it's trading. And you may see that I'm trading in a hog trade right now. So that's gonna be one I'm definitely gonna go and look at. So I look at these charts and these markets that I'm watching and I'm trading first. And anything I need to make an adjustment or if I need to update my chart, that's when I do that. Next thing I want to do is now I want to look at some other commodities to see if there's any, any that I want to add to my watch list and start watching, keeping an eye on. And I do all this within a time frame between 10, 20. Every now and then it may take me 30 minutes, but this is basically the time frame it takes me. And I was asking, do we sit in front of a computer all day? So when I'm telling you 10, 30 minutes, I'm done. I'm basically done. And I may check back in and see how the market doing at some point throughout the day, and then I may not. But no, I'm not watching the market all day. I'm off doing whatever else I got to do because I've already did my charting, updated my charts, and it don't take all day, the way that I like to trade, Barbara.
Excellent. Good to
Yeah.
know. Mr. Johnny, how about you? Do you sit in front of the computer all day?
Actually, I do.
I think Johnny's sleeping in front of the computer.
But I'm not looking at the charts.
I
Yeah,
think
so here's what I do. What time do the markets trade?
almost 24 hours a day, 6 days a week.
No, but there's a cycle. What time do they start?
Oh, 7, like at night, they run through the night and then to about 8 in the morning, then they have a break and they finish
Back,
it.
right?
Okay. All right. So at 7:30, or excuse me, 7 at night, I take a look and see how it opens. But like, let's take a look at the charts. So either what we teach is you're either in an uptrend, a downtrend, or sideways trough. So no matter what I'm looking at, where am I within the cycle of uptrend, downtrend, or sideways trough? Let's so as Delvin says, I get on and look at the chart, and so I already know that if I trade a 1, 2, 3 bottom, and I'm watching the market go up, should I say, then I know I'm trading an uptrend. So at 7:30 in the morning, at 7 at night, did the market open up? Did it open down? Where's it trading? All right. 7:30 in the morning when it closes, I take a look where it closed in the morning and where it opens back up at 8. All right. Is it still within my uptrend, my downtrend, or whatever? So, like he says, how's the market going? In commodities, I like to listen to the market report, and that goes to every hour on the hour, around 20 after the hour or 20 before the hour. So I can just take a quick peek on how things are going. And fundamentally, how's it tracking? Right? And that's really all the time I spend. I'm at 7 at night, at 7:30 in the morning, at 8:30 in the morning. So RFD-TV, their market day report starts at 8 Central Time. So at 8:20, they show where the market closed on the night session. At 8:40, they show where the market opened, and then that's it for me.
Excellent, Johnny. That's excellent. If you don't know, Mr. Johnny is a producer in the market and futures and commodities market. So he's not sitting looking at the charts all day. He has a whole ranch to run. So just to plug that in, he's an actual producer. No way he has time to sit and look at the charts all day and not run a ranch. He can't. So you don't have to sit in front of your charts all day. You can go on with your daily routine.
Well said, Miss Barbara Warren.
And you know what, Barbara, also, thinking about the fact, but what you and Johnny were both pointing out, it's just a wonderful thing that the market that we trade almost 24 hours. Like you said, they only close for a short period of time. throughout the week and then open it back up. So having that day session and then having that evening session, you know, the market's constantly trading. And you know, that's one of the things, you know, when I'm asked, even on some of the podcasts we've been invited to, some people may ask, well, what's the difference between, you know, trading the futures market versus the stock market? That's one of the differences right there. The fact that the futures market had a day and night session. It trades most of the time. And in the stock market, we just have a day session, right? There is talks about having a night session implemented into the stock market, but it hasn't happened yet. But that's one of the key differences. We know what time the stock market opens, what time it closes. And then when you go to the futures market, you go to the contract specifications and you'll find the different hours for whatever it is that you're looking at. The meats have a different time that they trade. The grains have a different hours that they open and close. The energies and so on. They all have different hours, but depending on the exchange, what exchange they trade on. So that's great information. Good question, Barbara. Appreciate it.
Yeah. Okay, our next one is why we use bar charts. There's three, types of charts we're going to highlight. I thought Mr. Johnny may want to talk about the three different type of charts and why we specifically use bar chart out of the three.
Yeah. Okay.
Actually, well, for me, it don't really matter which one of these charts, whether it's the line or whether the candlesticks or whatever, because I see the same information on all three charts. Okay, so it doesn't matter to me which one that I look at. I'm more looking at the overall trend of the chart. But it doesn't matter to me which one. But a lot of people like to see the volume or to see the candlesticks to where you see the difference between the high and the low of the day or the trading range. Where it opened, where it closed, and the range. There's a lot of difference between a day trader or somebody that's trading like we're trying to teach. To go back to the previous question as it relates to this, let me give you an example like Bitcoin. Bitcoin has been trading in a range of, say 102 to 107. And so as long as it was trading in that range, you could make a decision to either get in or get out of the market between those two levels. But we were waiting for it to break out. And it just recently broke out. Well, now it's going to come up with a new range. It may be 120 to 112. So again, where am I going to get in? Where am I going to get out as it relates to that trading range? But for us, what we try to teach here, instead of trying to micro trade, so to speak, we want to be able to get in at a change, whether it be from an uptrend to a downtrend or from a downtrend to an uptrend, to make a broader movement in the chart with lower risk. So because of that, we're not necessarily looking at the charts as they relate to how the candles are or etc. That's why we're looking at the broader picture. I hope that answered this question.
Yeah, it did, Donnie. You know, and I just want to touch on that other part of the question about why we use bar chart because and I think everybody has to kind of have their own opinion, but it just seems to be the best platform out there, period, when it comes to charts. It seems like they have the best set of charts when it comes to charts. And I'm not saying that the other platforms don't have good charts. I just seem to like bar charts better, you know, and every platform or brokerage house, wherever you open your account, they all gonna have charts that you can use and take advantage of. But we use bar chart because it's just the best charts out there, in my opinion. And the platform is so much easier than a lot of other websites you may go to trying to look at charts. It's real user friendly. It's and it's used by everybody in the industry for the most part. It's the best platform, in my opinion, out there to go to when it comes to charts. So that's why I use bar charts and I love bar charts. So I hope we covered that well, Barbara, but anything else you want to add, feel free.
Oh, no, sir, you did.
Okay. Chart type purposes. So as you can see, there's, you know, several when it comes to this particular topic right here: trend analysis and strategy and plan execution, risk management, time commitment, and managing your emotions during the trade. But when it comes to purposes of the chart, there's many. You know, we know when it comes to the chart, I say all the time that charts speak to you, that they actually are telling a story. When you learn how to read charts, you realize that this chart is actually telling a story. And now I can understand what it's trying to say. And, you know, that's the analysis part of it. You know, you will realize that it's a story being told. It's telling you what's going on with supply and demand. It's telling you the trend is this, or it's telling you that the trend is about to change. It may be getting ready to change. Or it's telling you that this particular market may be quiet because you may see it stuck in a channel. If you don't know what that is, we're going to talk about what a channel is. But it also can tell you that this chart is not quiet. It's really volatile. It's a volatile market, meaning that there's a lot of movement. There's a lot of buying and selling going on. And going back to when we were talking about candlesticks and bars, you'll see that the volatility by the length of those bars, by the length of those candles, that tells you and lets you know how volatile that market is or isn't. And that's one of the good things about those analysis. You'll be able to put together what's going on once you learn how to read the chart. And that's one of the things you're going to learn. That's what we're going to make sure you learn. If you don't know how to read the chart, don't feel no way about that, because we didn't need that at one point. You're going to learn this. Most of the way from here is going to be about charts, okay? So just know that over time you will learn how to read these charts. And what's also good is you learn when you have a system. You learn to look for certain things on these charts, and once you know what you're looking for, you know, then you decide to put a plan together and have a strategy. And that's what we, you know, come in with what we actually look for in the chart. That's how we come up with trades to take advantage of by the strategies and the formations that we'll be watching for. We put a plan together and we get in the market and we stick and we follow that plan. And that all comes from the rules, and then learning how to read the charts. We heard one of our biggest rules we always talked about on the rules was risk management, and the charts is a perfect example of risk management. We will have a certain way that we like to enter the market. We have a certain way that we exit the market, and we definitely use the one that we use, that rule that we talk about always, but always use a stop loss. All these things will help us when it comes to risk management on our charts. And just get excited about the fact that you're gonna learn how to read a chart and use and take advantage of all these purposes right here. Now, one of the things that you heard talk about, not only on when we went over the rules, but we watched the video that talked about it. Trading can be real emotional. When I say emotional, I mean emotional. And it just seems just a little small clip in that movie where you see just how emotional trading can be. When it's moving in your favor, it's emotional. When it's moving against you, it can be emotional. And you have to learn how to control your emotions when it comes to trading, because that's where we make the mistakes. That's where we make those irrational decisions when our emotions are in check, are in control, and we don't stick to the plan. You don't understand and use the right proper risk management because our emotions kick in. So all these things come back to the charts and they go back to the rules. But there's a lot of purposes of what we're gonna be able to use the charts for. Anything you want to add, Johnny or Barbara, feel free.
I'm good.
You want to talk about the time frames here, Johnny, or you want me to?
Hang on just a second. Okay. Well, I guess I will say a little bit about the previous. There's all kinds of information that you can derive from different charts. RSI, for instance, relative strength, okay? In other words, is it overbought? Is it oversold? Is it, is the volume up? Is the volume down? Et cetera, et cetera. And most of this stuff can be utilized for developing your plan, but more importantly, day trading, or when you want to enter or exit the market, but not to develop your plan whether or not you're going to get in the market, set your goal or your expectations, and setting your stop loss, et cetera, et cetera. All right. So when we look at things and we're trying to develop our plan, bar charts makes it real easy for us because we can look at different charts in different lengths of time, yearly, monthly, weekly, or daily, okay? We can look at a 3-month chart, a 6-month chart, a 1-month chart. But we can look at different time frames, which gives us a different look or a different picture. And that picture can let us know whether or not we're in a long-term uptrend, a long-term downtrend, a short-term, medium term, we can look at different aspects to determine where we are in the cycle, because the reality is the markets are cycles. They go up, they go down. They go sideways, but they never quit. So where are we in the structure, in the time frame and where are we within the trend? So that's why it's good to take a look at all the different ones, because different charts give us different amounts of information.
So Johnny, are you saying that each one of those time frames gonna have a whole totally different look and not gonna look the same?
They sure can, yes, sir.
Yeah. Which means they got a different story they're telling, right?
Absolutely.
Yeah. Yeah, awesome, man. And it's good that we had the different time frames because you know, as you start to get into trading, you learn how to trade. You might find that you like one more than the other, and you prefer to use this one rather than that one. But it gives you that history, like Johnny talked about. I love it.
Hey,
And
can I ask you a question, Delvin?
yes,
What is this class about? Futures, right?
yes.
Okay. Can you tell me what the price of corn's going to be in the future?
I'll tell you what the price is going to be.
Yes, sir. Can you tell me with certainty exactly where it's going to be next year at this time?
No.
No, nobody can.
Mm-mm.
We can utilize these charts the best we can to try to predict where it might be. All right?
That's right.
Half of the people are saying it's going up, half the people are saying it's going down. The people that use the most information that they can derive from the history of this will have the most luck or the best chance of being correct. Correct?
That's right. That's right. As Eric say, educated guess. But you're right. You're definitely right, Johnny, because you know, the more information you gather, the more information you take into consideration, that's just gonna, you know, help your chances of being right on the trade. But we definitely cannot predict the market at all, right? So we want to do the best we can with our, you know, our chart work. If it's fundamental information, you gather information you can, and definitely have a system. You know, it's important to make sure you got a system when you're trading. So we don't just go freelance when it comes to our trading. But excellent. Probably anything you got before we open this thing up?
No. Did you want to show the different charts and bar chart?
Yeah, that would be great if we can show the
Okay.
different time frames.
Yes.
Yeah.
Yes. Mr. Johnny, what market, or Delvin, what market do you want to go to? Any particular one? Corn. Okay.
Corn or Bitcoin?
December contract fine?
Yes.
Yes, ma'am.
Okay.
How do you get that, Barbara? If, you know, for the new person.
When you come onto the website, what you want to do is sign up for a free bar chart account. Just give them an email address and a password, because if you don't have an account, whatever you do here is not going to be saved. When you come back, it's gone. So you don't have to pay for it. They do have monthly, membership. They do have yearly membership, but you can do everything you need to do with a free account. And so you come over here and you click on futures. And this is everything about futures in here, but we want to focus on the commodity groupings. And I know that corn is a grain. So I'm going to click here. And it's going to take me specifically to the grains. And I chose the December contract for corn. So I'm going to click here. under the contract name December 25. And it's going to show me all the months for corn actually that you can trade all the way up to December 2028. So I'm going to choose this particular one. This is the one we're going to look at now. And to see the full chart view, I have to click full chart. And it's going to take me to the bigger picture for the corn chart. And so here we are.
Barbara, when you were showing those different contract months, I heard you mention 2028. Are you saying that corn is trading futures contracts 3 years out in the future?
It is indeed all the way to 2028. Hence the word, that's why we're futures contracts. You can go all the way out, you know, not just in your current year, but all the way out as far as that commodity will allow you.
Yeah, awesome. So when you said that you going to the chart, we got different time frames. Barbara, you said there was on that slide, it said that there was a daily, a weekly, monthly, and a yearly. Can you show us those different time frames? How we
Yes.
get to it?
So at the bottom of this chart, they're listed down here. So I'm going to click a 1 day chart. So this is a daily chart. And as we go through them, we're gonna, yes, this is a daily.
Corn, right?
Yes, this is all corn, but this is the daily chart for corn December 25.
Okay.
And this is 5 day. As you can see, this 1 day looks totally different. You wouldn't even know it's the same commodity. It looks totally different from the 1 day for this 5 day. This is the 1 month. The 1 month looks totally different from that 5 day. Looks totally different 1 month. Then you have several months after that. But they all look different. They show a different picture. So this is 6 month. You notice the 6 month looks totally different from the 1 month than it does from the 5 day or the 1 day. Totally different picture that it displays. Then we have a 1 year. The 1 year does not look like the 6 month. Looks totally different. This is a year of information. This is 6 months of information. So this is 3 months, 2 months, 1 month, 5 day, 1 day. This 1 year, then there's 5 year. The 5 year gives a different picture from the 1 year. Doesn't look the same. This is 5 years worth of data. And it goes all the way to 20 year and then max. So it's a different picture throughout every chart.
Wow. So every time frame gives you a whole completely different story, right, Barbara?
Whole completely different story within a different time frame in that market, in that contract month. Totally different information and scale of time, basically.
Yes. Thank you, Barbara. I love this because you know I love charts. So there's the time frames. What I want you to note and remember about the time frames is it's all about what you prefer. And Johnny mentioned that the different time frames don't have, you know, different information. So basically, the more time, there's going to be more history, more data, and you get to see that from the example that Barbara just showed us. But that's why I asked the question to Johnny about, does each time frame have the same look? The same, but it look different. So you'll see that every single chart look totally different from the other one because there's a different amount of history, different amount of data that's on each one of those charts. So I just wanted to say again, if you don't know how to read charts, take a deep breath. Don't get overwhelmed. I promise you, we felt the same way before. We never knew how to do. At one point, we didn't know how to read a chart too. And you will learn. That's part of what we do. Teach you how to read charts. So I want to make sure I say that one more time. But thank you for walking us through that, Barbara, because you want to know how to use bar chart and how to get to where Barbara is right now. Because if you're going to be a technical trader, you're going to use the charts a lot. So thank you, Barbara.
Can you go to the 6-month chart, please?
Yes, sir. There you go.
Okay, Tanya asked, it might be good to see, you know, what do you see here? What are you reading here in this chart, Delvin?
Tanya asked to see what you want to see.
What are you reading when you see this chart? What do you see?
Oh, well, I definitely see that the market established a downtrend. That's the first thing I see. That the market, without even doing a 50% retracement, I see that the market established a downtrend. And also I see that we could be going into a sideways channel. Could be starting to make a sideways channel here with the current price is what we're trading at right now. So it tells me that that 6 months ago we were in an uptrend, Johnny, and then we went into a downtrend and kind of been establishing a downtrend ever since.
What else do you see on that chart?
And now, also when it comes to, we're gonna talk about some formations, guys. And y'all may think we look for a lot of stuff when it comes to the chart, when we really don't. We keep it real simple. We're not looking for a whole lot of stuff. So, first I want you to know that if are thinking, wow, man, it's gonna be something. There's really not a lot of stuff we're looking for. We keep it real simple, and we're gonna get into what we're watching for, but it's not a whole lot, okay? And when I look at this chart, some of the stuff we look for, I see it. I know we haven't covered that stuff yet, so I won't get into it, but I see some of the stuff that we watch for on the chart, Johnny.
Yeah. And so that the point is just as a quick look at this chart, like Delvin says, I see we've been in a downtrend. Okay. Also see that it looks to me like we hit a new low. So does that mean are we close to a change? Or are we going to continue going down? So what I quickly do is would you go back to a 1-year chart, please? Okay, when I look at the 1-year chart, we're still at a low on a 1-year chart. Okay, so now I say, all right, are we close to a bottom? Then I say, let's go back to a 1-month chart. Barbara? 1 month? There we go. Okay, now this is telling me what's going on currently. We're kind of running sideways. but it's going to say, this is something. Now, you're going to hear this. I see a big old huge gap over there. And I say, if we know that things are going to cover eventually, then I'm going to say, well, maybe there's a good chance this thing may turn around. So I'm going to be watching this thing really, really hard for a formation.
Mm-hmm.
But that's what I look for in the chart. And that's everything. So now I know that this is a commodity that I want to start looking at real hard. But it doesn't mean I'm going to get in it yet. This means I'm going to start looking.
What I get from that information, listen to Johnny, what that told me, listen to Johnny B, if I, was looking at the chart and I'm trying to understand what's going on. Basically, what I got from Johnny B is that prices are trading at a price range that they haven't been at in at least a year, because he showed a yearly chart where prices were, hadn't been this low in at least a year. So we know that prices are much lower than they've been in the last year. And that validates what Johnny was saying about the fact that, the market could be getting ready to change direction. So he's watching for the market to show that it's changing direction, but it's also undecided. So you see in a 1 month chart that the market's trading sideways. And we're going to explain and get into what all this means on the chart. But it was just a little quick glimpse into what's coming, what we're going to be talking about and going over. Anything else y'all want to add before we open up?
No, sir.
No.
Great. Awesome. Nope. I love it. I love those slides. I love the chart, Barbara. So great stuff. We went over a few minutes, but let's still open up for questions or comments, because I know we shared and went over a lot tonight, and I know you got value out of this. So let's have any questions or comments before we jump off. The floor is open.
Okay, comment. No question tonight, but just to say, this was a very informative class. I appreciate it, and it's just great info, and I'll be studying up on that. Thank you.
Thank you, Pam. Appreciate it. Want it to be not too much where it be overwhelming, but there's some good stuff that we got into on this call tonight.
Okay,
Yeah,
I got a, my bad. Go ahead.
Rasheed, what you saying?
Yeah. I have a question, and I want to make a comment. Comment first is that, yeah, I definitely appreciated all the information that y'all gave, and the fact that y'all talk real slow. I talk a little fast, so you know what I'm saying. Y'all slowed it down so we can understand. So I appreciate that. My question is though, depending on the commodity that you're trading, there's a time throughout the day that it starts and it opens up. It's not always the same time for each commodity, right? Like versus stock. I know y'all said that earlier. They only do it from the morning, like starting in the morning up until 4:30 or something in the evening. But with the futures trading, certain commodities start at a certain time of the day. Is that correct? Am I understanding that?
8:30.
8:30 p.m. or a.m.?
A.M.
Gotcha.
Well, let's back up. Rasheed, the market for corn opens up at 7 p.m. on Sunday night and trades till 7:15 in the morning. And then it opens back up at 8:30 and trades to 1:15 in the evening, in the afternoon.
Gotcha. So it's like two sessions basically throughout a day. When it comes to
and then it closes and opens back up at 7 at night. So every night, Monday through Friday or Sunday through Friday, it trades those hours.
Gotcha.
If you go into bar charts and look at the contract specifications, it tells you exactly what the hours are.
Okay, great. Where do you find the contract specifications at? Is that on the side of the? I'm actually in bar chart. That's what I'm trying to, that's why I'm asking this question.
I'm gonna show you like right quickly. I'm
Okay.
on Euro FX. So when I click on the July contract and it's already expired, it's right here. It's on the price overview page. And it's in the contract specifications right here, trading hours. It's gonna be in the same spot for all the commodities and contract specifications. So like this time is different from the grains. This one is 5 p.m. to 4 p.m. Sunday through Friday and settles at 2 p.m. So that's what Mr. Johnny was saying, contract specification. But it's right here. If you look in this left panel, price overview is where you find it.
Gotcha.
Does it help?
Yeah. A lot.
Okay.
So,
All right.
since we here, if everybody doesn't mind, just give us 2 more minutes if we can. Since we here, Johnny talked about the fact that the grains open at 7 o'clock Central p.m. And one thing I want to note about bar chart is that when you're looking at prices, when you're looking at a bar chart, just remember that it has a delay. So it's a 10-minute delay when you're looking at prices. So Johnny said, if we could go to corn, if I just go to the grains, if you don't mind, Barbara, and let's look at the grains. So if you see, it's a 10-minute delay at 7:10, which is now, we'll see prices start moving in the grains. But if you come at 7:05, you see that the market still show that it's closed. And you be saying, well, I thought Johnny said, and I thought the specification said 7 o'clock. Well, the market is trading if you're looking at real time, but because you're looking at delayed prices, you'll notice that it won't start 7:10 because it's a 10-minute delay. So if we're looking at the grains right now, you should see that little S that was showing right there when the market was closed, that S should be gone now because the market should be trading. And you should see prices actually moving. What time is it now? 7:11. So yeah, the market you should see the prices changing.
They are already.
Yeah. I see that. So basically, whenever we open up the chart, say like for example, I was looking at Bitcoin. I had it from the last time I was on the chart. And it said something like from 5 p.m. to 4 p.m. I guess the following day. So, but whatever we looking at the charts, we need to get it like a 10-minute, like a view. If we go directly when they open up, so like we said, corn is at 7 p.m. So if we go open up the charts at 7 p.m., we need to at least wait to 7:10 before to pay attention. Does that make sense? To make sure that everything is in the right space, or do we, the way that it opens up, like we don't see the opening price at least for the first 10 minutes? Am I understanding that or no?
Well, the main thing is you need to know that the prices are 10 minutes delayed. So if you look at this, you'll see there's already a change that it's down by 3.25%, 3.5%, or 3.5 cents. So if I decide, well, I'm going to go get in the market, then I better call my broker to find out what the real price is right now, what the bid and the ask is.
Mm-hmm.
Because it may be different than what it is here because it's 10 minutes delayed.
Okay.
Right.
Can I share a little nugget?
Mm-hmm.
Yeah. So if you look in this column right here, time, you know this market is open because the clock is ticking on it. If it's closed, it will show like the date, correct? It will be a date
Correct.
when it switches over to open. And if you look, it's 1904, but it's 8:14. So that's your delay right there. That's your 10 minutes right there. So that's how you know it's on a delay. Just look in this column. If you don't see a time here, the market is closed for this commodity. And that's for all the commodities up here for futures. But you also can tell it because you see it flickering back and forth. So that's an indication, obviously, that it's open. But if you just look in this time column, if it's a date here, the market hadn't opened yet. Yeah, so that's helpful. That'll help you know ease right off that the market is open.
Gotcha. All right, that. Yeah. Okay. Well, thank y'all. I didn't mean to keep, ask all these questions, but I'm trying to learn. So thank y'all.
No, that's a good question. You ask a question, it helps everybody on the call. So thank you for asking the question because we all got a chance to learn something.
Absolutely.
So last question. So basically, the communication between you and your broker is important. Would you say that? Or once you learn how to read the charts on your own in a certain way, whether it be technical or whatever, do you know what I'm saying? You just pay attention to the signs and just keep moving, or do you communicate with your broker often? Or is that something we should do in the beginning when we first learn it when it comes to pricing and stuff like that?
You should always talk to your broker.
Say that again, Barbara?
You should always, you have to understand your broker, they're professional. They're a licensed profession. So they hold a license for a reason. You should never get to the point where you can't communicate with your broker because you have to understand the only expert is the market itself. But it's good to have a broker because they're licensed in the industry for a reason. They can tell you, they're always going to be able to give you information on something that you don't know. It's always good to communicate with them.
Okay.
Oh yeah. Yeah, it's always a good benefit to establish a relationship with your broker. I've always done that. I always had some great brokers but yeah, it's like Barbara said, it's always good to have that rapport with your broker because it's definitely helpful. Let's say that. Yeah, we want to have the confidence to pick up the phone and call the broker first of all. Sometimes that's a challenge for some people. They intimidated by the broker. They don't want to call the broker. And I know that's something that some people face. Not everybody, but some people have that challenge. So I don't want to call the broker. But not saying you got to, but it's a good thing to do. Yeah, you're right, Barbara. They definitely know some stuff you won't know.
Mm-hmm.
Good question, man. I think everybody should keep in mind that there are no dumb questions. Questions that you think don't make sense. But every single question is a good question because it's something that everybody's gonna learn from. I'm telling you, you ain't the only one got that same question. That's why I always keep asking if there are any more questions because I know you have them. If it wasn't that everybody was totally 100% clear, everybody would be answering the quizzes. And that's why I know we have questions because we're not all answering the quizzes. Some of us look at the quiz and we don't answer it. And we got a question, we're not clear about it, but we won't get that question asked and answered. So when you have a question, it's not a dumb question that you can ask us. It's gonna help everybody up when you got a question. So one last call for questions or comments before we get off, because we went a little long tonight. I appreciate y'all patience. Any more questions or comment before we say
All
adios?
right, well, sir, how you doing?
Renzo, how you doing, man?
All right, all right. Right quick. When y'all started out, did y'all study one commodity to get your understanding of training, or did you do multiples?
You know what? I didn't study one, but I got started when I started paper trading. Lorenzo, I found a few that I wanted to paper trade, and I just focused on those.
Okay.
Yeah, so I took 2 or 3 different commodities that I was gonna paper trade, and that's what my focus was, on those 3. Yeah.
Okay. That's what I figured. I just wanted them kind of give verification, because that's been one of my lingering thoughts about what should I choose or whatever. And they all good because you can get in and out of any of them. That's what's so good about this opportunity and whatnot. But I say, and it's hard to try to follow several, being a beginner and throughout the day and stuff like that. So that's what I think. I'm gonna pick me 2 or 3 and follow. And then as I'm studying, then I can then come back with some questions during the class sessions and stuff.
Man, and let me say this, cause I want you to remember this, cause you're gonna remember this call down the road, okay? Right now, it probably feels like, man, it's so many of them. Man, I don't even know which ones, right? That's how you feel, right?
Uh-huh.
Remember that I'm telling you right now, down the road in your journey in the future, you're gonna be saying, man, I wish it was more. Watch what I tell you. I wish it was more of these to look at. Yeah, but right now it feels like it's too many to look at.
Uh-huh.
Well, watch how that switches over down the road for you.
Okay, I will put a note in my book about that.
Yeah.
Thank you.
Yeah, great question though. But if we don't have any more questions or comments, then we're gonna wrap it up right here.